The Reserve Bank warns Bitcoin may crash. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. I want to have a look at this article from ABC. Reserve Bank warns Bitcoin may plunge as FOMO subsides, and the ASX snapped two-day losing streak. Yes, well, we have had a few days of the stock market going down here in Australia, but let's look at Bitcoin. Well, we can see here it's now at 58,000. In the last 24 hours, it's down 3.24%. In the last week, it's down 10%. So you can see it's going down. Ethereum is still over $4,075, and it's also gone down. Frustrates me. My mining activity is going to be less profitable. We can see here, Tether is at $1, unsurprisingly, but definitely one to watch. Then you've got Solana at 201, Cardano at $1.83. Just can't get over that $2 or maintain over that $2 level. And XRP is sitting at $1.06, everyone. But good old Doge, 22 cents. There you go. Oh boy. But crypto may crash. What has the RBA got to say about this? The value of Bitcoin and other cryptocurrencies may plunge as the FOMO, fear of missing out, which drove their huge price gains, starts to unwind, a senior Reserve Bank official has warned. Meanwhile, the Australian share market recovered from a two-day losing streak during which it fell by 1.3%. The ASX 200 closed 0.1% higher at 7,377 points. This was despite a surge in overseas inflation, which drove gold prices higher and reignited worries about sooner-than-expected interest rate hikes. Some of those inflation worries spread to the oil market, as prices fell to a six-week low, particularly after OPEC and the International Energy Agency warned of impending oversupply, along with the prospect of China, Japan, and the United States dipping into their fuel reserves. The Australian dollar fell to a six-week low of 72.7 US cents, followed by another 0.5% slide overnight. Bitcoin was trading at $59,620, a little bit higher than what we've just checked now. It fell below US $60,000 mark on Wednesday for the first time in 2 weeks. The price of the volatile cryptocurrency has fallen from a record high of $69,000, which it reached on the 10th of November, but has more than doubled its value since June. Didn't quite break the 70,000 mark. And I'm noticing on Twitter a lot of these Bitcoin enthusiasts are deleting their accounts. They were predicting Bitcoin to 200,000 by the end of the year. We're running out of time, guys. Do you reckon we could hit 200 or even 100,000 by that time? Do you think we can breach 70,000? So Bitcoin prices are threatened by future regulation. The surge in Bitcoin and cryptocurrencies has largely been driven by fads and fear of missing out, according to the Reserve Bank head of payments, Tony Richards. In a speech delivered to the Australian Corporate Treasury Association, he predicted that the price of these digital assets might fall sharply in coming years. Dr. Richards outlined several scenarios where the current speculative demand could begin to reverse and much of the price increases in recent years could be unwound. I'm suspecting that we will start to see a greater push for central bank digital currencies, like our very own Reserve Bank, like the Fed, like in China, like the European Central Bank, even the New Zealand one. They're all investigating this. It would give them immense control over their currency. Imagine that. You've got your digital wallet here of Australian dollary dues, and you're in an area that needs economic stimulus, so you've got increased purchasing power. Or they want to implement negative interest rates. Just imagine the control you could have. Imagine the danger to freedom. Imagine it being used for potentially nefarious political reasons. We already have people unbanked now. Yeah, that's kind of Black Mirror stuff, even though I've never watched Black Mirror. But then again, there also are amazing opportunities with having completely digital currencies. So we'll have to see. You've got to appreciate both sides of it, but we still need to make sure we always have paper, real money. Well, as real money as you can get in this fiat world. You know what I mean. You need to have paper currency. Don't let them ban it. Ever. Anyway, back to this. The senior RBA official argued that people might start to pay more attention to the warnings of security regulators about the risk of investing in something with no issuer, no backing, and highly uncertain value. Governments might also intervene to regulate the cryptocurrency industry, given its potential use in facilitating financial crime and the black economy and the very high use of energy, he added. He also quoted research that says that Bitcoin ecosystem uses as much power as Thailand, the 23rd largest economy in the world in terms of energy use. The energy use of crypto is just insane. It's not the most efficient way to do a transaction, everyone. I'm just frustrated every time I move some Ethereum. The other day, I moved some Ethereum from my, I was mining on a pool, so I sent it to my wallet, and then to get to my wallet to my exchange cost me the equivalent of $16. Awesome, eh? Anyway. He said that cryptocurrency prices may come under pressure if the RBA and its overseas peers issued their own central bank digital currencies to defend their control over digital finance, or let commercial banks issue stablecoins whose value is pegged to fiat currencies to reduce price volatility. What would happen to Tether if they're pushed for regulation and they're no different to a bank? We'll have to see. The people behind it, they wouldn't even meet the requirements of to run an organization like that. They'd be banned. However, the RBA is unconvinced about the merits of issuing its own CBDC at this stage, despite doing a lot of research on the topic. He said it was because Australia's current electronic payment system, the New Payments Platform, NPP, already allows for safe, convenient, and low-cost payment services that can be done instantaneously on a 24/7 basis. Well, yes, making a direct here's the thing. For me, sending Ethereum, for my little example, from my wallet to my exchange, took some time. It cost me a lot of money. It took a lot of time. And I know people are saying, you can change it into other crypto. Well, no, I've got Ethereum. I want to send Ethereum there. So it cost me money and it took time. Then to get the money out of my exchange onto my stockbroking account, that happened in an instant because it was using this platform. It shows you, so there's competition. Dr. Richards also disclosed that he set up a cryptocurrency wallet in 2014 and owns a pretty small amount of Bitcoin and Ethereum. He said that he used Bitcoin for a few small transfers and even purchases at a cafe for research purposes. So banks and oil dragged the ASX lower. Some of the worst performing stocks on the Australian share market were Whitehaven Coal, Mesoblast, ALS, and Aristocrats Leisure. The big four banks posted significant losses, including CommBank, Westpac, NAB, and ANZ. Yes, I know CommBank was under $100, guys. It definitely got shaved off. This was after CBA warned investors on Wednesday that its margins were being stretched by intense competition and discounting in the home loan market, even though it still made good profits. A sharp fall in oil prices weighed on the share price of energy stock Santos and Woodside Petroleum. Brent crude futures fell 0.5% to $79.94 a barrel on Thursday afternoon, on top of its 6.2% slump overnight. Higher gold prices boosted the share of Evolution Mining and other gold miners. The precious metal spot price lifted 0.7% to $1,864 an ounce as inflation worries pushed investors towards the so-called safe haven asset. Well, we're looking at all these other inflation surges. You'd probably be smarter investing in wheat than in gold, really. Anyway, UK and Canada inflation surge. Canada and the UK were the latest countries to report a big rise in their cost of living. Inflation in Canada jumped to an 18-year high as consumer prices jumped 4.7% in October compared to a year ago. Inflation hasn't been this hot in Canada since Jennifer Lopez was topping the charts in 2003. So a surge in Canadian gasoline prices, 41.7%. Whoa. That's insane. I've got to have a look at, have a talk to Mike to see how he's going. That's insane. 40%. And here we're whinging at approaching $2. Financial markets are betting the Bank of Canada could hike interest rates as early as April next year. Meanwhile, UK consumer prices lifted 4.2% in October compared to a year ago. It was the biggest rise in British consumer prices in a decade, and double the Bank of England's inflation target of 2%. The headline number was lifted by an increase in regulated price caps for energy and higher petrol costs, ANZ economist Brian Martin and Daniel Haynes wrote in a note. The stretch in price rises, combined with the strongest post-full-on labour market data early in the week, would seem to open the runway for the Bank of England to hike rates. Although given the surprise non-hike earlier in November, markets may be reluctant to price in a December move with absolute certainty. So Wall Street dips on inflation fear. We're already seeing inflation. On Wall Street, the Dow Jones Industrial Average fell 0.5% to 35,948, and the S&P 500 lost 0.2% to 4,690, and the Nasdaq Composite dropped 0.3% to 15,923. Despite the falls, the three major U.S. indices are still trading near record highs. The Dow was weighed down by Visa shares, which slumped 5.9% after Amazon said it would stop accepting cards issued by the operator in the UK due to high fees charged for transactions. While strong U.S. retail data this week showed that a rise in inflation has not stifled economic growth so far, investors feared that further increases in prices could hurt growth and push the U.S. central bank into tightening policy ahead of schedule. Joe Saluzzi, co-manager of trading at Thames Trading in New Jersey, said the inflation fear is still there and the market continues to debate whether rising cost of living was transitory or supply-driven. The Fed will hold as long as they can, but if inflation continues to go higher and you continue to see inflationary pressure, then it becomes a question of how much and how often will rates rise. Target was the latest big-name retailer to report positive results as it raised its annual forecasts and beat profit expectations, citing an early start to holiday shopping. However, the company's shares fell 4.7%, tracking declines of those of rival Walmart on Tuesday local time, as both retailers flagged a hit to their September quarter margins from supply chain issues. Well, guys, there we go. Let's have a talk about this one. Bitcoin may crash, everyone. Potentially it may. What's interesting is it's a correlated asset now. All talk of it being a non-correlated asset to other parts of the market and an inflation hedge. Is it working? Bitcoin goes down, the market goes down. The market goes down, Bitcoin goes down. Sure, it's had an insane price rise since the beginning of the year, but is that stable? Is that a store of hope? Will it stay at that level? There's some people predicting we'll see 10,000 before. There's more likely to see $10,000 Bitcoin than $100,000 Bitcoin. What do you reckon? Where do you think the average Australian punter will put their wealth for the long term? I'm talking a normal person, not a tech swab or someone who has an ideological position behind a limited digital currency, which I completely understand why, particularly with fiat being, created out of thin air so easily. In Australia, I think it's housing. I think that's where the average punter will go. Anyway, guys, thanks for watching. Let's have a look at this last video I did asking whether the cash rate will crash housing. Check that one out down in the picture down there. I'll point down there. Anyway, guys, thanks for watching, and I'll see you in the next video. Have a great day. That's good coffee.